Welcome to EV World News, where we talk about electric vehicles, green energy, and the stock market. I've got a few things to go over today. Thanks for listening in. First of all, one of the more interesting things that I've seen, and this is something we're starting to see where the prices of EVs are starting to become a little bit cheaper. I recently reported on how the Toyota Corolla was getting in there and was getting at a price that was comparable to the Toyota Corolla and the Tesla Model 3. Well, here's an interesting report from Benzinga. The average EV price is $14,000 cheaper than a year ago in the United States. Now, this is a pretty big drop. So the average transaction price for an EV in September was $50,683, which was down from over $65,000 a year ago. And the price had also fallen from about $1,600 higher than that just in August to September. So it's falling significantly. And a lot of this is the Tesla Model 3 and the Model Y have both had price drops, and that's made a big difference. And I think that when you keep seeing this, especially continuing in the next year when the EV tax credits that are eligible here in the United States, that I think you're going to see really good adoption of EVs next year. So in 2023, we've seen the launch of approximately 15 new EV models, large increase in number of products and the mix available. The day-to-day supply was well above the industry average at the beginning of October. The supply of EVs was over 97 days. It was at 111 days back in July, so that means sales are picking up. But I thought, that's some pretty good news for the whole electric vehicle industry. Now, this one's kind of interesting. So, when you're in a business and you're trying to raise money, there's always going to be hard questions that investors are going to ask. Well, this one was from the Rivian CEO. RJ Scaringe had the big question Jeff Bezos had, do we understand the chessboard? And so this is interesting because Amazon's been able to adopt the Rivian delivery vans. I see them everywhere, these electric delivery vans, and that they've done a great job of electrifying that last mile for your Amazon delivery packages. And Bezos is someone who resonates with entrepreneurs and individuals. Amazon didn't show making a profit for something like the first 20 years of their existence. Now they just absolutely dominate the market in the online marketplace space. Do we understand the chessboard? Bezos said. Are we planning a two-move strategy or do we have a 25-move strategy? It takes a lot of build-up. It's a complex, multi-dimensional 20-year chess game. Rivian's relationship with Amazon runs deep. Ahead of its 2021 initial public offering, Amazon disclosed in a filing that held equity investments, including preferred stock of Rivian, representing about 20% ownership in Rivian. And the holding had a value of 3.8 billion at the time. Amazon continues to be the top investor with 16.7% stake in the EV startup following some disposals of their stock. Rivian also struck a deal to produce 100,000 electric delivery vans. Rivian received 314 million from Amazon and its affiliates for the 6 months ending June 30th. So it's pretty good revenue. They know they've got business coming in from that sector, regardless of how they do in the truck and SUV market. Now, my next topic it has to do with insurance. So one of the things that we were mentioning on last week's show was that some car insurance companies don't want to insure EVs, particularly in the European Union. Well, what's interesting about this is NIO has entered the EV insurance business alongside some competing Chinese manufacturers. NIO acquired Huding Insurance Broker Company Limited in December by using a subsidiary and whose majority shareholder is NIO's founder and chairman Li Bin. So the news emerged, the name was updated to NIO Insurance Broker Company Limited in the Chinese business registry. Let's see if there's much more to this. The move into the insurance business put NIO puts the luxury EV market on par with Li Auto, BYD, and Xpeng, all who have their own insurance subsidiaries. Insurance sales and EV sales are closely correlated and often undertaken in the same purchase. Insurance premiums of EVs are more complicated to assess than for standard vehicles, since assessment of insurance is closely tied to faults attributed to the various technical innovations applied by the vehicle maker to its units. This makes owning an insurance company a much easier bet for an EV maker than going through a third party for risk assessment costs. I find this quite fascinating because in theory, electric vehicles should end up in the long term being a safer, especially if you look at all the self-driving features in the Teslas, and eventually other companies going to catch up. Things preventing you from accidentally drifting outside your lane, from hitting things, making it a lot easier to see where other vehicles are around you. Be interesting to see where this plays in the overall insurance business. And that's all the news I had for today. Everybody, appreciate you listening in. And everybody, till next week, have a great